Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the leadership contest and the crowning of a new Prime Minister in the UK, where we go from here, and the potential trading opportunities that will continue to appear on the British pound currency pairs as a result of the Brexit issue. My name is Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, first off, we'd like to introduce you, if you don't know, what a market opportunity is. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's solely your decision whether you trade on market opportunities or not. So here is an example of a market opportunity. You can see fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair, such as the resignation of the UK Brexit minister in this instance, or positive employment figures in the US. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the screen, 1.2840, this shows the right moment in our estimation to come in and open a trading position had you decided to trade on this market opportunity when it was active. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. You can see the trend direction here, which is down. It's important that you know how to use these stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit, and on the right hand side of the page you have calculations. If you close the position using take profit, you can expect these kinds of profits at support 1, 2 and 3. And if the price is going against you, then you can have a loss of this amount shown at resistance 1, 2 and 3. The pivot point is the starting price based on which resistance and support levels are calculated. These support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So, what brought us here? In a word, Brexit. Quite simply, the UK has been traditionally divided about the European Union, and these splits are seen throughout the UK and within the political parties. In the end, despite her efforts to deliver on the referendum vote, Prime Minister Theresa May was unable to get her version of a managed Brexit deal with the EU, since her own party would not support her deal in Parliament. On May 24th, Theresa May stood before the entrance to the Prime Minister's residence in Downing Street, London, to announce that she had decided to resign as Conservative leader on Friday, June the 7th, and would stand down as Prime Minister on July the 22nd. As she concluded her speech and walked away from the cameras, her rivals in the Conservative Party were already organising their campaigns to succeed her as Prime Minister. So where do we stand at the moment? A confusing number of Conservative Party MPs trying to become Prime Minister has been reduced to 2. The favourite, a former Mayor of London and former Foreign Secretary Boris Johnson, and the Environment Secretary Jeremy Hunt. Johnson is seen as the hard Brexit candidate, while Hunt is considered more flexible and is backed by the more Euro-friendly wing of the party. Conservative Party members have been voting on which one they want to become Prime Minister, and the new UK Prime Minister is expected to be crowned next week on Tuesday, July the 23rd. The race has not been without interesting controversies, but since this has had little impact on the financial markets, we won't be covering them here. The main point is, despite a scandal or two, Boris Johnson is highly likely to win and become Prime Minister. So how has the GBP been performing? In a word, volatile. As was expected, the instability since the referendum result has caused the pound to swing in value, but in a downward direction. The red line marks the date when Prime Minister May announced her resignation. You can see the pound dropped against the US dollar over the next 4 trading days as a result, dropping 0.83%. You may be asking why the resignation of the Prime Minister and the increased chance of a hard Brexit only caused the price to fall that much. The answer is that markets were expecting Theresa May's resignation, since multiple reports pointed to it earlier in that week. You can see the pound has fallen further since then, although it has recently climbed against the dollar. This is more due to the fall in the value of the dollar. Let's also take a quick look at the euro-pound currency pair, and the green line marks May's resignation. You can see how the euro has grown as the pound has fallen, with the currency pair 1.8% up from May the 24th to earlier this week. Over the past year, you can see how the pound actually climbed as optimism over a potential Brexit deal increased. Although by mid-March, when UK lawmakers voted down Prime Minister May's deal for a second time, the pound has been in a downtrend ever since. You can see how the pound has fallen to its lowest level since Theresa May announced her resignation. Over the past week, the currency pair is slightly higher, but this is mainly due to the fact that the dollar has declined against a basket of other currencies due to dovish noises from the Fed, implying that Fed rate cuts may occur by the end of the year, with one likely this month. On the right-hand side of the graph, on July the 9th, the GBP-USD currency pair recorded a fresh low, not seen since December last year. From January, the euro had recently been in retreat against a basket of other currencies, with stagnant growth and issues with the Italian government debt crisis, and with populists throughout the Union that did well in the European parliamentary elections. The pound is trading lower, but is awaiting clues from the Conservative Party's leadership contest for further direction. As can be seen by the red line, which marks Prime Minister May's resignation speech, clearly the market does not regard the contest to succeed Theresa May as a positive development. So, future prospects. As we move into the final week of campaigning, we can expect high volatility, both this week when we have crucial inflation and service PMI figures revealed, and next when the final result of the leadership election will be announced. Boris Johnson continues to lead in opinion polls, and analysts expect he will win the contest, despite setbacks and criticism from within his own party during the campaign. However, the likely new Prime Minister faces many of the same threats that Theresa May faced. He has an October the 31st deadline, by which, one way or the other, he states that either a deal with the EU or exiting without a deal will happen. He also faces a divided Conservative Party, and there is a high likelihood he will also face a no-confidence vote and the possibility of being one of the shortest-serving Prime Ministers in history. The EU has already stated it will not change its offer, so the stage is set for yet more volatility and political instability for the British pound and the country. This means that investors will continue to have good opportunities to trade on pound currency pairs over the coming months. Well, I hope that you found this webinar useful. Until next time, please join us at Fortrade again soon.